You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody. That music means it is Friday. It is noon Central, 1 p.m. Eastern. It is time to view some volatility. My name is Mark Longo from theoptionsinsider.com, as well as from the ever-compelling Options Insider Radio Network. Hope the new year is off to a good start for you and all your loved ones, and indeed, hopefully, your portfolio. Hopefully, we'll walk you through some fun stuff here in the world of all things volatility. Reminding you, by the way, out there, if you like what you hear at this show, anything we do on the network throughout the week, keep those reviews, those comments coming. We do love to hear from you guys, and also it helps new folks continue to discover the network in these turbulent times. And let's see who else we're hearing from today. First, let's go out to the palatial manse known as the GIOVINAZZI compound on the shores of Maine, with the waves crashing, moon overhead, lightning thundering down. Interesting image of the GIOVINAZZI compound I have in my head. But we are joined once again by the rockingest of lobsters, Mr. Andrew Giovinazzi from OptionPit.com, by way of Carmen Line Capital. Mr. G, welcome back to Volatility Views here early in this new year of 2021. And do you like my mental image of the GIOVINAZZI compound?
It was quite stunning. It reminds me of that. I think it was an ancient movie by I'm trying to Alfred Hitchcock. I think Rebecca, like a 1938 classic movie of the rain dashing on the rocks and da-da-da-da-da. So there you go.
That's the era I was going for. I was thinking more old school Universal horror movie from the 30s, so like Dracula's Castle, Frankenstein, that sort of thing. That's what I was going for.
Yep, that's it. Although today it's sunny and 33, so there you go.
In my mind, it is perpetually night, perpetually raining, lightning is crashing down, and the waves are crashing. And that, listeners, is the image of the GIOVINAZZI compound. All right, and also joining us from a little bit farther afield, I'm pleased to welcome on once again in the MIAX hot seat today, Mr. Tom JARCK, the Volatility Product Specialist over there at MIAX. Tom, welcome back to Volatility Views for this first time in 2021, sir.
Thank you, Mark, and everybody. Happy New Year. It's good to be back on the show. Thanks for having me. I decided to start the new year with a big change. On New Year's Eve, I went and had my shoulder surgery, so my arm is in a sling.
You had surgery on New Year's Eve? Wow.
Yeah, it's pretty cool. Yeah, my doctor was available. It was the last day of the year. It worked out well.
Hey, I guess from an insurance perspective, that makes sense, yes.
So, so I've been doing a little bit of PT and rehab and watching the markets. So
interesting.
Looking forward to a good show.
To each their own. Some ring in the New Year's with revelry. He rings it in with surgery as we keep on rolling right on into the Volatility Review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review, the portion of the show where we look back, look at right now, and indeed look a little bit forward into the world of all the volatility trades and trends and analysis and unusual activity and all that good stuff. Coming into showtime today, we're seeing a bit of a break from the endless sea of green that has been on the screen for pretty much the entirety of the new year, outside of that brief dalliance to the dark side on the first trading day of the year where everyone sold their gains in the new year as opposed to last year, and then proceeded to buy everything after that because we've been mostly green. Today, not so much. Most of the major indices in the red. S&P and NASDAQ off about 0.5%. Dow off about 1/3%. And a little bit of red means a little bit of green on the vol screen. Most of the major indices slightly up from last week. We got spikes coming into showtime a little bit shy of 23, about 22.75. Puts it up about 1 point from last week. VIX cash at about 23.5, so a little bit of distance between VIX and spikes right now. VIX cash up about 1.75 points from last show. And our old friend VVIX back at that level we've been watching for the better part of this past year, which is, of course, that 120 level. It's up 12.5 handles from our last show, up to about 121.5. So a lot to unpack here as we unwind this week and unwind the vol. Again, it is a holiday weekend here in the U.S., listeners, so no option block, no crypto rundown on Monday, and also means the vol landscape a little bit different. Everyone's always asking, when they taking the weekend out, when they taking the weekend out. So let's go around the horn and see if we can determine that. Maybe it's already gone. Let's find out. Tom, since you've been convalescent out there, I expect you have been naught but glued to the market. So I expect at least 28 minutes of cogent analysis from you right now, sir. What has been lighting up your tape in the land of MIAX, sir, while you're recovering from shoulder surgery?
Well, from MIAX perspective, obviously we had the futures launch back in December on the 14th. That went, I think Shelly talked about it last week, but so I'll be quick, but that went smooth. Volumes have been a little light. This week we saw a couple days of a few hundred contracts or more. So that's been nice. Some spikes options traded last week. So that's been kind of the MIAX side of things. And then if you'd like, I can get into the market a little bit about some of the vol things I'm seeing. The things that I guess I've been noticing. Well, obviously we're getting into earnings season, so you've got a lot of single stock vol to watch, and implied correlation seems pretty muted. It's been pretty much on a downtrend. So that's implied minus realized seems to be pretty steady, but you might see that revert after the earnings cycle comes through. We started out with the banks this week, but obviously you have a pretty decent. I don't know. It shouldn't be, but it feels like a macro event next week with the inauguration. But with all the all the press back and forth. So that's been something on the radar. Obviously, vols have been, somewhat firm. Came off a little bit, but this week they've been, pretty firm. SKU's been pretty bid up. I think there is a little nervousness around all the security for next week and things like that. But there shouldn't really be any issues from a vol perspective. I would think it'd be more like sector rotations if that everything's official. But what else is on the tape on my mind here? It's the Russell small caps. Since late September have been just outperforming the S&P pretty phenomenally. And with that you've had kind of the at the money vol spread, if you will, the floating vol, staying pretty steady. So that means the implied vol of the strikes on the Russell has definitely, kind of blown out relative to the SPX and the SPYs. So that's been something that I like to watch quite a bit. I think that can present some opportunities for folks, however you want to play it. But and when I do see that big outperformance of the small caps versus SPYs, and I think back to my days on the institutional desk where clients would be looking for different kind of macro hedges. A lot of people would play the short side of the IWM or the Russell via whether it's options or outright delta shorts. But that's something to consider as a macro hedge because you get that beta kick when the market rolls over, if it rolls over. But those are kind of the main things. And of course, the crypto world has been really exciting. My son asked me to open up a Coinbase account for him. He's 15.
Well, there you go. That's the inflection point. When the 15-year-olds want to sling some Bitcoin, then you've hit the inflection point out there. But you're right. You hit on a lot of things that have been of interest to our network of late. First off, I've never heard, outside of the folks at FTSE Russell, who we talk to every week on our TWIFO program, they're obviously fixated on small caps. But of late, the last couple of months post-election, seems like everyone has got small caps on the brain out there. Like Brian's talking about it on OPR. Matt Amberson has talked about it on a couple different shows, how he's seen the skew out there pretty much lining up in ways he's never seen it before in small caps. So, yeah, the story of late has definitely been out there on the small cap side. And you're right, also about the inauguration. Those are usually, let's say, sleepy affairs, not really big volatility drivers. Will he make it to the inauguration stage? Who knows? Stay tuned, not that kind of affair. And yet this year it has a drama that has exceeded just about, you're hearing reports of 13 to 20,000 National Guard troops being deployed in and around the area to prevent a repeat of what we saw a few weeks ago down there. So you're right, it does have a much more air semblance of a volatility type event than any inauguration I can certainly remember in recent memory. Mr. Rocklops, now we go back out there to that castle on a hill deep in the dead of night. Mr. Rock Lobster, sir, if you could peer out from your dark window through the smashing rain and the waves, what has been lighting up the eye of Volman, sir?
It's hard for me to hear you with all the rain crashing on my windows and the lightning breaking.
And don't forget the villagers outside your gate with the pitchforks and the torches.
So I'm chatting with one of my students now in the chat room, right? Because I basically I feel like I'm online all the time, which is a good thing. We have a lot of students at Option Pit. So they're talking about, the gamma imbalance. She's talking about gamma imbalance in the SPX. I posted something about skew. Amberson was saying, Matt was saying, Russell skew, it is bid up. Like normally, as vol increases, the curve kind of flattens a little more because vol's going up and the at the money vol's going up, and generally you get a little. When I say curve, it's kind of the tail vol, but not right now. I just think this year has been we'll just call it a singular volatility year, and I don't remember. I know when you were a liquidity provider, but when did vol really explode? Like when you were trading, right? And when the market would go down, vol would definitely go up. But things really got crazy when upside moves came back into play, right? Where all of a sudden, if you have that just and I'm sure you've experienced it, right? The bowel loosening rip up the upside after you just sold a bunch of calls, right? So you're like, oh my gosh. So it just screams higher. So vol, the fact that things could rip up, vol also works on the upside as much as people don't think that happens, because it matters to the liquidity provider because they have to sell all this stuff. So I'm just looking at very, very expensive skew numbers, meaning out of the money puts relative to at the money, and at the money at a relatively high vol for VIX. That stuff is pumped. So, they're just, people are buying, or liquidity providers have this stuff jacked. Now, you would also think that liquidity providers, they sell juice. They could just go buy VIX futures, right? Here's another thing. Why is VIX 22 or 24 today for a brief moment again, when we're not moving? And it's because paper is everybody but the liquidity provider, by the way, right? That's hedge funds, governments, who the hell knows? But it's everybody but the liquidity provider because they're the ones that have to sell all this stuff. So you have to sit in the liquidity provider head, and as they keep selling options, what happens to implied volatility in general? It expands. So there's more buyers of juice, and they're just going to keep taking it up. They're not there to hold back the hordes, right? They're there to find a new price if demand warrants it. So the fact that we have high vol or VIX relatively expensive, Don was talking about that yesterday on Option Block. It's there because people are buying juice. People are buying juice because this election cycle, bizarre. Okay, there's nothing you could say about it. It's bizarre. The way people voted, the fact that we had all this mail-in voting, after the election when they're challenging it for literally every day for 2 months. You got the storming of the Capitol building. They took Nancy's lap. I mean, it's out from central casting right now. The whole I don't even think a screenwriter could have written a movie about this election cycle better than it's been to date. So all of that is causing vol in a time when stocks are going straight to the moon, and also because I believe there's probably too much liquidity from the Fed. Like there's a lot of money floating around. People definitely need to get back to work. Businesses have to open, all that kind of stuff. But that money floating around is buying stocks, buying juice, buying options. Traders are hedging more, right? Because the best position when the market's flying is a back spread, right? So you buy puts and stock in a combination, the market flies, you make money. So all of these things, I think, are contributing to the fact that vol is where it is. When does it stop? Who the heck knows? I certainly have been wrong. I've been wasting a lot of money buying vol puts. And it just hasn't happened yet. And I'm still doing it now, although I'm trying to be a little smarter about it. But that's what we have. And, we are coming into a part of the curve where VXX and all what I would call like the marquee vol products like VXX, UVXY, SVXY, they're all loading. They have a high concentration of that Fed future. Now, that future is around 25 plus. You got realized vol at 10. If we get through this weekend and Biden gets inaugurated, I'm looking at his platform. It's not totally crazy, mostly just Washington insiders. It's like business as usual, like Donald Trump's presidency never existed because all the people that were in Obama's are now back in this one. Or maybe some people from Bush or Clinton, who knows, right? But it's a very, I would say, kind of normal cabinet, throwback. So there's nothing crazy there as of now. What we do have is very just relatively high stock prices. You got pretty big multiples on all the big tech. Amazon is off the hook. It's like, I don't even know what the PE is. It's ridiculous. Apple is at a 40 PE. Microsoft is at a 30. I mean, you're getting really rosy numbers for pretty massive companies. So, again, all of this stuff contributes to vol. People are buying options. When people buy options, when you have a stock like Fuel Cell that goes from what, like $8 to $35 or whatever the heck the move was, right? People buy calls when they see that. Paper buys calls. They're not stupid. They're like, hey, stocks are going up $10 a day. I'll buy a call and make money, right? But when you have millions of people buying calls, somebody's got to sell them, right? So the vol's got to go up. And that's how it runs. That's how it works. So all of this is a reflection of what is going on. 2020 is still very much in everybody's mind. This COVID thing just never seems to go away. I thought we'd have a little bit more. The stock market has liked it since we got the vaccine, but the vaccine is kind of getting rolled out. It's still, it's still lots of people that need to be vaccinated. So, I would guess VIX will be lower in 3 months from now, right? But this week, next week, it could be anywhere, literally at this point, just because. Also, don't forget, liquidity providers, if the market starts moving, VIX is going up fast, as you saw today, right? We're down like 1%, like barely a little over 1%, maybe 1.2%, and they take VIX up 3 points into like 25, 26. It's already up there. So, again, this is the situation we have. That's the vol. There's just a lot of buyers of juice. There's a lot of buyers of calls. And liquidity providers feast on calls. They buy calls, they sell the underlying against it, they have a back spread that they can sell all kinds of crap against whenever they want. And right now that just doesn't exist, I think. There's just not a lot of call sellers out there. So that I think in general is kind of the vol picture. But I could be wrong. But I don't think so.
You could be wrong. And you're right, the notion of what we've seen of late from these interesting times would be hard pressed to believe them in a movie. That was the first thought I saw when I saw the storming of the Capitol a few weeks ago. I was like, if you saw this in your typical Michael Bay movie, you'd say, okay, that's a little bit, far fetched. People really storming the Capitol, but there we go. We all saw it in real life, which puts this inauguration in a little bit starker relief. Let's see if the futures are also in stark relief. Let's head on out to the VIX futures. Actually, before we get to the VIX futures, Tom, you kind of touched on earlier on the Spikes futures. Obviously, they just kind of got going about a month ago, so the volume is still growing out there. You said you're seeing some 100-plus contract days. Anything interesting or surprising of note out there, and how's that term structure starting to line up? Is it analogous to what we're seeing out there in VIX land, or are there any maybe interesting wrinkles in it, sir?
Well, based that they're both VIX and Spikes are based on the S&P 500 volatility, 30 days out. So the futures curves themselves as well are going to be, they should be somewhat pretty close to one another overall. So nothing really unique stands out, but as far as volumes go, it's going to take a little time. We started getting the folks to getting a lot more attention to it. We've been talking to a lot more people. There is definitely interest. It will start trading more. It's just a matter of a little bit of time. And, we launched right before the holidays, and then we came into the new year where there's a lot of other things going on. So it's hard to get people to really focus on something new. But, so nothing really stands out. But, the term structures should be somewhat, relatively related. The bid offer spreads have been pretty tight. Obviously, the size is, on the small side right now, but the quotes have been pretty much in line. Market makers are doing a good job. So it's, and then as far as the curve itself, I mean, as we just said, vols are definitely elevated here going into the next couple of weeks, whether it's earnings, whether it's inauguration, and with the skew being bid as well, that puts an extra bid to the volatility futures complex.
Yeah, I'm waiting for the day when the Spikes futures just develop their own complete and independent term structure. Everyone's buying July, just for no reason whatsoever, completely independent of what's going on in the SPX. That would certainly be an interesting day. Let's go on out to the VIX futures. They're looking kind of similar to what we saw last week. Obviously, the cash is kind of whipping around again, so that makes it look a little bit different. Cash looking a little bit juicy, so that Jan future and the cash are approximately equidistant coming into showtime, but we expect that cash will eventually settle down. And the Feb future coming in was about not quite 2 points, about 1 3/4 points premium to the cash. That's about half the distance that it was last show. But again, I got to remember that cash settles down, that distance will probably expand again. Same thing with the March future. It's at about 2.3 points premium to the cash. But hey, could be interesting stuff afoot. Speaking of interesting, it's still the same structure, kind of almost eerily so, that it was last week, listeners, where we see that front portion of the futures curve drift up, then out to about April. It hits the 2670 level, and then it just sits there. Is 2670 for April? Is 2670 for May? Is 2670 for June? Is 2670 for July? You get the picture. And then it ticks down to a 2655 for August, and back up to 2670 again for September. So it's just one of those aberrant things. It has this strange plateau where the market's saying, yeah, there's going to be maybe something up there, but we have no idea what or what the heck it is. We're just going to keep them all the same, and then we'll kind of figure it out as it comes. So interesting stuff. Mr. Rock Lobster, are you still as amazed as I am that we have this, what is effectively this volatility plateau in the latter portion of the futures curve that refuses to budge, sir?
Well, I think it kind of lends a little. So one of my, secrets for trading the vol futures is, the flatter the curve is, the more likely VIX is going to move in the don't know up, don't know down, but from my observation, just looking at it move around for 10 years, that's kind of what appears to me. So if you notice what the curve looks like, right, it's super flat past what date, right? And then the front of it dives down to the current vol. So it has all the look of, can we get Joe to the finish line? Right? Like if I had to name this curve, it is, can we get Joe to the finish line? Like, get us past January 20th, get that January cycle to expire, and then all of a sudden we will be, all those other futures will kind of start, I believe will start coming back into line because they have to get over this date. So I think it's very much a calendar. And then all of a sudden everybody's going to be turning around and they're going to look at each other like it's kind of like when everybody had to walk to the stock desk and buy some stock because all of a sudden they're about to blow through all their calls. Everybody next week will say, all right, these futures are in the mid-20s and SPX really isn't moving that much. Who's the first person that's going to go sell them? And I think that's kind of what we're waiting for. But I do believe everybody at this point, they want to see Joe in the office. They want to see him in the Oval Office. They want to see him sitting behind the desk, and they want things to get back to normal. I think that's what the vol curve is saying, and it will surprise me hugely if Joe is in the office and we don't start seeing a little bit of fade coming out of that, by end of next week into the following week.
Get Joe to the cheer. One of those, they're not going to believe it until they see it kind of thing, which, again, I guess given recent precedent, not exactly shocking out there. Let's see what's going on out there in Spike's Options. We profiled a pretty sizable three-way, 1,000 by 1,000 by 1,000 going up last week, listeners. And Spike's Options, kind of strong kickoff to the new year, and that's still dominating our tape. Let's just do our top five out here in Spike's Options. Number 5, we got the March 30s. Number 4, Feb 11s. Then we get into that three-way again. Number 3, pretty much all top 3 are tied. 1,000 of the Feb 40 calls against 1,000 of the Feb 32 half calls. So looked like a vertical with the kicker. Remember, the other kicker was 1,000 lot of the Feb 29 puts. Of course, the execution made it seem like almost like they were buying that downside. But you see those kind of verticals with the put usually. It's kind of the other way. But still interesting stuff out there. Vertical versus / with puts. Is it maybe a strangle with a call kicker? A lot to parse there. By the way, that three-way 1,000 lot dominating the top here of our top 5 in Spike's Options. Let's move on out to VIX Options. Actually, fair amount of paper going up out there. It kind of got sleepy in the beginning of the week. Then it seemed to awaken. Coming into today's show, we got about 415,000 contracts on the tape as of a few minutes ago, and the ADV has ticked up to about 462,000 contracts. Puts it up about 28,000 contracts from this time last week. So a little bit more paper sneaking in. Let's get into what the top positions are out there. By the way, last week we were hand-wringing about, there's only 2 calls in the top 10 in VIX. Well, cut that in half. It's down to 1. There's only 1 call now in the top 10 of sizable VIX positions out there right now. So everybody's in the Rock Lobster camp of fading, but so far at least, not going that way. Number 10, $1.36. That's how much it cost you to break into the top 10. In VIX land, I get you to the Feb 20 puts. Number 9, 180,000 of the March 21 puts. Number 8, our first and only, the lone call survivor in the VIX top 10, 186,000 of the Jan 40 calls. 40. Interesting. Wonder what it would take to get us back up there to those levels again. I'm scared to think what it would take at this point, given what we've already seen just in the past couple of weeks and how we saw vol play out. What it would take to get us back to the 40 strike? An interesting question. Number 7, also 186,000 of the Feb 17 puts. Number 6, $1.98 of the Feb 15 puts. Number 5, 216,000. So all the way up to number 5 before we even break through the 200,000 level. That gets us to the Feb 18 puts. Number 4, 221,000 of the Jan 22 puts. Number 3, 222,000 of the Jan 20 puts. And number 2, 233,000 of the March 17 puts. And number 1 with a bullet out there today, 314,000 of the Feb 21 puts. You're going to see that put strike. Feb has been pretty active of late. In fact, it's active again today. Of the 415,000 contracts lighting up the top 10, or lighting up VIX, I should say, out there today. Let's see what the most active are, the top 5. And spoiler alert, one of them is those puts. Let's start here. Number 1, most active contract today. Got the Jan 22 puts. These are expiring on the 20th, listeners. Going out for, let's see here. These are going out for 36,000 contracts going up on the tape today. Number 2, 26,000 of the aforementioned Feb 21 puts. Number 3, 24,500 the Jan 24 puts. Number 4, 20K of the Jan 23 puts. And rounding out the top 5, a call managed to fight its way in there. The Feb 35 to the tune of 16,300. A little bit more paper on the tape yesterday, including an interesting print out there. 846,000 contracts on the tape. Remember we said this on the option block yesterday. By noon, there was like 600,000 contracts on the tape. So it was apparent that something was up, listeners, and that something appeared to be maybe a sizable put roll. Maybe we'll get the Rock Lobster to weigh in on this a little bit later, but it looks like someone rolling maybe the Jan 19-22 put spread, almost 70,000, 61,000 on the 19 puts, 74,000 on the 22 puts, going out to 74,193 of the Feb 18-21 puts. So obviously a sizable roll, and that's going to dominate the tape. Number 1 out there yesterday, 98,000, almost 100,000 of the Feb 21 puts, 89,000 number 2 of the Jan 22 puts, 79,000 number 3 of the Feb 18 puts, and 62,000 number 4 of the Jan 19 puts. So it seems like that roll / ratio roll is dominating the top 5 yesterday. And number 5, again, sneaking into the top 5 yet again, a call. The Feb 40s, 42,000. So there are some calls to be found out there, listener. You just got to look a little bit. Wednesday, 476,000 was the amount of contracts hitting the tape, the big dog out there, the most active contract. Feb 22 puts, Jan 22 puts, 52, almost 53,000, followed by the Feb 21 puts, 51,000. Feb 70 calls, back to that 70 strike again. 31,000 of those bad boys, 22K of the Feb 18 puts, and rounding out the top 5, almost 21,000 of the Feb 24 puts. Tuesday, about 451,000 on the tape, so right around the ADV out there. The most active contracts, 28,000 of the Feb 21 puts. There's that strike again. Number 2, 22,000 of the Feb 30 calls, so some more calls sneaking back in there. Number 3, 21,700 of the Jan 22 puts. Number 4, 20,500 of the March 21 puts, and round out the top 5 here. Feb 17 puts, 16,500. Monday was the meager day of the week. Only 321,000 contracts on the tape that day. The most active, 18,500 the Jan 23 puts. Number 2, 16,600 of the Jan 30 calls. So some calls sneaking back in there. Number 3, Jan 19 puts, 15K. Number 4, Jan 24 puts, 12,500. Round out the top 5, 10,400 of the Feb 45 calls. Mr. Rock Lobster, any of this paper coming across your radar? In particular, maybe that interesting, sizable put ratio roll that went up yesterday, sir?
Yeah, you know what comes across my radar? Just the fact that puts keep going out worthless in there. So I wish I had some awesome color for you on this stuff. But but I hadn't noticed a whole lot of but I would just say interesting volume, just from the fact that just people are kind of buying everything. So I wish I had a little more color for you on this, but I surprisingly, I really don't. But I mean, the 21 puts, that is an option that I own. I own a bunch of those, and it's just getting smeared. Unbelievable how low the vol is on that strike relative to how high some of the vol is on some of the upside. So it's just a very, it's a relatively cheap option. So that is something I'm noticing because I've been buying them, kind of thinking that once Joe gets in office, things are going to be a little less volatile. But as of right now, that has not happened. But we don't have Joe in yet. So we're trying to get him in, get him across the finish line, see what happens to the ball.
Get the man in, and then we'll see what happens. So, yeah, help the Rock Lobster out. Get some of those Feb 21 puts to actually make some money. It sounds like he's not the only one loading up on that strike out there. You loading up on VIX puts? Maybe something else? Maybe you want the guy gobbling up those 70 calls. Hit us up. Let us know what you're up to out there. We know what you're up to in VXX. You guys are fading it all day long. Not so much on the fade this week. Coming into, as of a few minutes ago, VXX was at about a 16.80, 16 3/4. Puts it up about half a point from where it was this time last week. It's doing some paper, though, today. 290,000 contracts on the tape as of a few minutes ago. The ADV, if you're wondering, about 250,000. That's ticked up about 10K from last show. So already passed a day's worth of volume out there in VXX as well. So VXX starting to get the lift of some action. Of course, January is always a popular time for VXX. Those folks who like that set it and forget it play of buying some far out of the money puts in VXX. It's typically in the Jan cycle, so that's probably what's contributing to this because those positions are going away. They're going to have to roll or readjust or do whatever. But so Jan, typically for those who are, let's say, VXX tourists, the infrequent players out there, Jan is where they like to hang their hat. So could be contributing to a lot of this paper. It could be all the other factors we've talked about earlier in the show as well. Let's see what's lighting it up today. The most active contract today. Actually, before we get to that, let's do the top positions out there in VXX. Right, let's see. 1, 2, 3, 4, 5. So it's 50-50 this week, listeners. It's calls to put. So an even spread out there in VXX in terms of calls to puts. Number 10 out there, the top sizable positions in VXX right now. 25K of the Jan 17 puts. Number 9, also 25K. Of the Jan 21 calls, number 8, 26,000. March 16 puts, number 7, 28, almost 29,000 of the Jan 18 puts. Most of these are going away today, so a lot of this is going to change by Monday. Number 6, 30K, almost even of the Jan 20 calls. Number 5, 31,000 of the Jan 17 calls. Number 4, 32,000 of the Jan 25s. Number 3, 34, almost 35,000 of the Jan 16 puts. Numero dos here, 49K, back out to March 20 calls. And then number 1 with a pretty sizable bullet, 57,500 of the Jan 15 puts. Doesn't seem like we're going to get to those ones unless we have some serious VXX erosion between now and the close. That's why I always find the OI for VXX in Jan kind of sad because there's tons of bridges that are just a little bit too far. We see a lot of OI go out worthless, and that seems like it might be the case again out here this year. Even though they had a good run for the erosion side, they can't complain, those folks who've been fading out there. Most active contracts today, 33,000 of the Jan 17 puts, so maybe someone closing and doing a little bit extra on top of there. 33K of the Jan 17 puts, number 1. Number 2, 23,600 of the Jan 18 puts in terms of what's lighting it up today. Number 3, in our most active contracts, the Jan 17 calls, 14,600. Number 4, about 12,000 of the Jan 18 calls. And round out the top 5 most active today for VXX, about almost 12,000 as well of the Jan 16 half puts. Mr. Rock Lobster, I know you crazies out there. They're probably hitting you up as you speak in your pitch chat saying, what's up with VXX? So what have you guys been up to out there in the land of VXX of late, sir?
Yes, I have some 16 puts that are going out worthless. Although I did collect some dollars on the back spready call side, so it wasn't terrible, but still it wasn't great. But yeah. So
that was you on the 34,000 of those on the 16 put? That was you?
I mean, you look at it right now, and that's just where the puts go to die, you know? They are, as of right now, it wouldn't surprise me if we closed unched on the day in SPX. So Because VIX is right now looking about being negative, and even though we had that little sell-off with VXX is up 7 cents. So, yeah, we could see something. Again, get Joe to the finish line. So, yes, there are some 16 puts that are going to go out worthless. Some of them are mine, which makes me a little grumpy, but the good thing about VXX is there's always another couple of weeks. There's always another couple of weeks to buy some puts as long as the thing is drifting lower into contango. So, and as we're speaking right now, I think, are we seeing a red tick on the spikes? Maybe are we spiking red? Oh, it's almost there. It's almost there. So
22.25 right now on spikes. So yes, it's down about half a point from where we started the show. Not quite red yet, but it's getting redder.
It's getting there. It's getting there. So we'll see. It's again. It won't surprise me if we're up on the day today. I to be honest, because maybe everybody thinks Joe will get Joe to the finish line. So anyway, but I don't think we're going to see 16 today. Maybe next week. Maybe next week, indeed. Unfortunately, for all the Jan holders, next week ain't going to cut it. But hey, as Mr. Rockloff just said, there's always another week if you decide to buy it. So you got to pay for it, but there's always another week. You can always spend more in VXX. That's the takeaway out there, listeners. Tom was alluding to earnings vol at the top of the show. We are kind of at the commencement of that season, listener. So for all of you out there who like to focus on something else besides the, shall we put it in mild terms, the ridiculous macro environment that we're in right now. I want to focus on something a little bit more concrete, a little bit more digestible. Well, then earnings season is upon us. That will be a welcome relief for all of you. Really kicking off in earnest this week with some of the financials. We had BlackRock and Delta before the bell yesterday. Today we have JP Morgan, we have Wells Fargo, Citi, and PNC. So a lot of financials popping off today. And of course, as always with this time of year, we got the data for you. You know where to go to get it. TheOptionsInsider.com. Options, news, and articles tab, top right corner there. That'll get you off to the races. Not just for these, for everything we post on the website these days. If you're not checking out the site in between episodes, you're missing out. A lot of great, fun stuff going up over there. But let's break down some of these reports because we have the earnings move results, and indeed the earnings season reports, courtesy of our friends over there in ORATS land. Right now, let's look at BlackRock. They were popping off yesterday before the bell, a whopping $779.75. That's where their stock was going into the announcement. They were pricing in 2.5%. They actually delivered about 3.5% in the wrong direction, to the dark side. But still, movement is movement at the end of the day. So they're delivering out there. And then coming into showtime now, they're actually off even more. They're down to 735, off 8.25. So longer term, beyond the initial blush of that analysis, the premium buyers seem like it's working out for them. The stock is down to 735 right now. So that move has extended out there. We got a bunch of others popping off. Let's look at a couple here. We don't have the results reports yet, but we have what they were pricing going in. Let's look at a couple. JP Morgan, 140.35 is where they were going into their announcement. They were pricing in, let's see, remember we've been talking all week, listeners, about how the financials are pricing in a little bit of extra juice. Let's see if it's merited. Let's see, they were pricing in 354. In the past, they moved 252. And so far, the stock seems like it hasn't budged. It's off about 1%. It's down to 139.70. So it's off, 60-odd cents. So at least in the early blush, that juice was not merited. Let's see if we can see something similar out of, let's go to PNC. They were at 159.10 going into their announcement. They were pricing in 390. In the past, they moved about 390. So keeping things kind of in line there in PNC. And right now, they're off about 2.5%, down to about 156 and change. So they're actually moving a little bit, maybe underwhelming the straddle, but they're actually at least moving. Let's see if Wells Fargo can buck the trend. Wells Fargo going into their announcement, 33.80. They were pricing in $1.60. In the past, they moved about $1 even. So a little bit extra juice there as well. And coming into showtime, Wells Fargo taking it on the chin. They're down about, $2.50 or about 7%. So, and down, looks like about $2 and change from where they were going into their announcement as well. So looks like Wells Fargo bucking the trend. Of course, they've been a bit of a drama-filled financial of late as well. So
perhaps no surprise that they're delivering on a little bit of vol. Let's look ahead really quickly before we move on to your questions. Netflix popping off next week. They've been known to exhibit some vol in the past. Coming into this report, they were at $507.80. They were pricing in $34.96. In the past, they've moved $28.62. So a lot of extra juice. Again, it's hard to argue that juice isn't warranted. And Netflix, of course, last year passed its prologue. It wasn't warranted, but we'll see if that holds court. Maybe we are starting to see that inflection point where folks are pricing in more juice. But of course, it has to be merited. Otherwise, we're going to see that trend go away. So still too early to talk about the season. We're just only a couple of names I've reported, but we'll check in on it again next week when more names keep popping off. And it's just starting, listeners, so buckle in. A lot of reports, a lot of analysis, a lot of volatility to come. And of course, a lot of your questions to come as well as we head right on into the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, let's do it. Let's kick it off, actually, before we get to your questions, shining the spotlight back on you, listeners, because you guys have been flocking in, apparently. You said the two magic words this week, Tesla and Bitcoin. That's what you guys all have on the brain. Let's admit it. Not entirely a vol-related poll, but of course these are two of the most volatile instruments on the planet right now. So from that perspective, it is. But we asked you at the beginning of the week, quite simply, what will hit 1 trillion, the 1T market cap first? Tesla or Bitcoin? As of when we posted this, so I think it was around Monday of this week, Tesla was at about 760 billion and Bitcoin was at about 600 billion. Of course, a few days later, that's going to have moved dramatically because that's what these stocks do. But in general, interesting stuff. So far, it's shaping up where you folks are. At first, it was very tight. It was very tight. Bitcoin and Tesla both pretty much even. Now Tesla has pulled ahead 57.6% to 42.4% for Bitcoin. Tom, does this voting surprise you, sir, in these two most volatile, most mindshare capturing instruments right now? And then also, B, do you have a vote, sir? If so, have at it.
What were these? What was the exact ratio again? What were the percentages?
The audience right now is 57.6% choosing Tesla and 42.4% choosing Bitcoin.
Yeah, I feel like I would have taken the opposite of that. I don't know. But yeah, I don't have a lot of comments on Tesla, but Bitcoin I do. There's that whole there's the other theory of the tulip mania, and that's I used to look at Bitcoin way back when, and I was a big believer in that. We get that kind of panic squeeze, and we did way back when, in 2017. Now I feel like you got a lot more institutional interest in it. It's going to be around for a while, and it's going to keep grinding higher. I think. I mean, it's very volatile, choppy, but it's going to be. That's I'm kind of a believer, and it's going to stick around for a while. So I'd be more in the Bitcoin camp.
I'll put Tom down for the Bitcoin, Mr. Rock Lobster, from your palatial and some might say terrifying castle on the hill, sir. Are you surprised by this voting? A, and then B, do you have a vote, sir?
I'm not surprised. It's because when you think about it, I mean, what's the value of either of those things? It's kind of hard to figure out, isn't it? What exactly is Tesla worth more, 2 or 3 times more than every car company on the planet?
Clearly the answer is yes.
So, excuse me. As of right now, the answer is yes. Is Bitcoin going to be worth, whatever? And really, what's the exchange for Bitcoin, right? I think all you can get for it is dollars. So it's, and believe me, everybody's into it and they're doing their thing. And, so it's like one of those things where nothing surprises me where populations can take securities once they decide, that they think they just buy it and it goes up every day. This is an old There's a reason why they say tulip mania, because there was a tulip bulb, squeeze, what was it, 400 years ago in Holland. But that's happened all the time. It's happened, every century there's been one. Just pick the thing that you want. It doesn't surprise me where it goes. I'm sure one of them will hit that because it's a nice round number. I just figure Bitcoin will hit 50,000 because it's a nice round number. So, and that's sometimes that's how things work. The market's just looking for the biggest round number they can find. So, we'll see. I don't know. So there you go. There's my answer on the Bitcoin, Tesla. And realistically, what is either of them worth? Right? All I know is that they're worth whatever people are paying for them today, but 2 years down the road, who knows?
Obviously, 2x 2 years down the road, sir. Haven't you been paying attention at all, sir? This is the past is prologue here. You talked about size lots. Revon Gorges has a comment on the other side of the spectrum, the small one lots. He says, a lot of calls are going to expire today for lots of people who bought one lots all year round for the first trade of the new year. Well, that certainly is the case. These the one lot traders have been hitting in mass, and there are a lot of contracts going out today. By the way, since you mentioned contracts going out today, a lot of people have been asking us about and we were just talking about Tesla, about the old aforementioned Tesla catastrophe puts. Remember, we used to watch these things all the time. They were the number one size open position out there in Tesla, and people have asked, are they still around? And the answer is yes, and a lot of them are going out today. In fact, you look at just the top 10 listeners, getting back to Revon's point about options expiring today, just in the top 10 of Tesla options positions, there are about 800,000 what you could euphemistically call worthless puts, including 181,000 of the Jan 1 puts, 178,000, of the Jan 20 puts. That's the beefiest strike. We got the Jan 2 puts, 100,000 of those. Jan 10 puts, 94,000 of those. Jan 4 puts, 93,000 of those. The Jan 40 is actually the beefiest strike. The Jan 40s, 82,000 of those bad boys. It's just ongoing all the way down the litany here. In fact, if you go beyond the top 10, it's many hundreds of thousands. It's well over 1 million contracts in quote-unquote worthless puts. And these are not even close. These are not 500 or 600 or 700 or even 800 strike puts. These are 1 puts and 10 puts. So there's 800,000 just in the top 10 of these things going out. So are they still there? Yeah. By the way, the most active position right now today and of the last week has been the Feb 20 puts. So people are still coming back to these, and they're replacing the Jan with some Feb, about 250,000 Feb 20 puts now on the tape. So that's the number one new sizable position out there in Tesla land. So folks are still coming back to replace these. We've speculated many times in the past what the heck is going on with this paper, because obviously on the face of it doesn't make a lot of sense, but we've gotten into what it is. Is it CDS hedgers, that kind of thing, but we won't repeat that again today. But either way, they are still open. They're going away today, and there's more coming behind them. So maybe these folks, by the end of the day, if they're done, we might see a lot more Feb 20s on the tape today. So interesting stuff on the tape here. Oh, before we go really quickly, Mr. Rock Lobster, last time you were on, you said you can't imagine if there was still an XIV trading during last year, 2020. You said because the volatility move this past year was orders of magnitude worse than it was what we saw back in 2018, which, of course, is when infamously XIV went the way of the dodo. Master Trader was listening to that show, actually Master Trader 7, and he said, I don't think there was a 100% VIX spike in one day during the Corona crash, and this wouldn't be the target like it was in 2018. So it's written a little strangely here, but he says it would have likely probably survived like TQQQ did with similar leverage. I'm not sure why he's bringing up TQQQ. Then he does mention that later. But yeah, it's silly for me to mention TQQQ and XIV together since they are totally different, which of course they are. My point was that they had similar returns percent-wise. So he got a little bit off track there, Mr. Rock Lobster. What do you think about Mr. Master Trader's analysis, though? He thinks that XIV could have survived in 2020, sir.
Well, it's hard to argue with somebody called Master Trader, by the way, who goes by
7. Master Trader 7. There are Master 6 others.
Trader 7. So he's the 7th iteration of Master Trader. You forget that XIV was not around this year in 2020. And I think a big part of XIV's problem is it contributed to its own demise. And I thought that was something, Mark, there was some suits on that maybe somebody tried to press press that product having to just jump through the gate at the end of the day. So while we didn't have that pop, what part of XIV and SVXY, for that matter, played in their own demise? So with the kind of vol that we had, if you had those massive short interests at 12 VIX trying to cover in a big way, I think we might have even had sharper moves earlier, to be honest, because the liquidity, remember, liquidity just went to zero quickly. So anyway, and there wasn't this, and it wasn't a pandemic issue, right? It was just, what was the issue that caused the volpocalypse, as I recall? And I think the answer is nothing. I think Donald launched the trade war, I believe, or something like that. I think that was the underlying reason. And that certainly was, what's going to happen, but it's not like we're all going to die tomorrow. So I would take a little issue with him on that one, although he is correct that VIX did not have that double day. But I think XIV would have contributed mightily to its own demise in 2020.
Yeah, that was kind of a self-fulfilling prophecy. It annihilated itself, and it took a lot of the market with it. Now it's time for us to take your prognostications, some of our own, into the future. It's time for that most difficult, most dangerous part of the show. It is time for the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody. Welcome to the crystal ball, the portion of the show where we break down what the heck is going on and attempt to wrestle with what the future of the volatility gods hold in store for us. Last time on the show, it was myself and the Greasy Meatball making prognostications. And so far, the new year off to a pretty decent tip, at least for me. I was predicting vol going to be not that far away from where it was this time last week. That's pretty much what we're getting. I was at a 22 double, so a 22.55. The Meatball was feeling the fade yet again at a 20.20. And right now, actually, Spikes is holding in there about 22.44. So I'm just outside. I'm 0.11 away, just outside of our bullseye, which is 0.1, the bullseye threshold out there. But pretty darn close, nonetheless. VIX hovering right around a 23.25. So a little bit farther away, about 3/4 of a point on the VIX cash. But then, of course, the Meatball many handles away. So he does not count. So that means I win. And I guess I'll almost a bullseye adjacent, really close. Let me see if I refresh Spikes again really quickly, if I can get that extra 0.01. Oh no, stays glued, 22.44. I was going to go 22 half too, and I moved it up to 22 double. So I was hoisted on my own petard there. But nonetheless, a victory for me. I'll take it because last year victories were few and far between. So that means I'm going to go first. And let's see, we're at 22.44, 23.25 or so in VIX cash. Of course, we have the big day next week that Rock Lobster was alluding to, and it clearly is a bit of a vol mystery as to what will happen. And vol obviously is being kept kind of steady through this and beyond because no one really knows. The conventional wisdom is that some vol will come off after the inauguration, and of course, our show next Friday will be in the wake of that. So I'm gonna go along with that as well, but I'm not feeling the vol annihilation that some others might be feeling, because we've had a hard time really breaking through this 22 handle sustainably, and who knows if the inauguration is really everyone's kept saying this is the one thing that's keeping it up, and then that one thing goes away and we're still there. So I'm going to say we're going to come off a bit, but not a ton. I'm going to say 21.25 this time next week. All right, there we go. Tom, you weren't on, so you don't get to lose, so you get to go next, sir. What are you feeling for this time next week, sir?
I agree with all your points there. I think there's definitely a little bit of a bid to the premium going into this inauguration for whatever reason, but understandably so. But but I don't know. I feel like I don't want to. I feel like it should come off, but I'm going to go with a higher Spikes, and I'm going to go with a 24. 24.
Okay, interesting. 24 for Tom. That frantic typing can mean only one thing. The Rock Lobster is going to accuse me of pilfering his pick. So is that what you're going to say, Mr. Rock Lobster?
100%. You totally pilfered my pick. So I was like, okay, I'm 21, 20. What's in it? I'm like, okay, 21 quarter. And like, oh my gosh, I can't. So you know what I'm going to do? And because this is a number we have not been able to hold, but I think Joe getting in office, and get behind the victory, the Nelson table is going to be a big deal. I think just maybe mentally, everybody watch the market not do anything. So I'm not gonna scum you by a penny. I'm gonna actually make a little bit of them and say $20.99. I just want it to be clear that I'll be lower than you on this one. I just want the listeners to know I'm not scumming you by a penny like I could. I'll go $20.99.
All you got to do if you want to claim a strike for yourself is you just have to win, sir. That's all it takes. You just win, and then the world is your oyster, and you can have whatever strike you want, listeners. So there's our market for next week, I should say. Mr. Rock Lobster on the bottom there, $20.99. I'm a little bit higher, $21.25. And Tom feeling the juice at a 24. All right. Unfortunately, listeners, that music means we've come to the end of this epic sojourn through the world of volatility. Before we go, let's go back around the horn. Tom, we'll start with you, sir. If folks are intrigued, they want to start slinging some spikes, either the futures or the options for themselves, or maybe they want to learn a little bit more about spikes. Where should they go? What should they do, sir?
They should go to MIAXoptions.com/spikes. You can find all the information there. And then if you want to go direct to look at some of the futures information, NGEX.com. But you can find everything on the MIAX site.
There you go, MIAXoptions.com, the place to go, /spikes, I should say, to begin your journey to the spikes dark side. You know where to go to learn more about all things Matrix, MatrixExecution.com. Learn about their execution services and trading technology, MatrixExecutions.com. And Mr. Rock Lobster, if folks are intrigued, they want to argue with you about your VIX scumming out there, where should they go? What should they do?
Just so that you know, the scumming only really happens on this show by the benign dictator. We don't actually do that in option. Although my students do front run my orders.
It's hard to scum when you're the victor and you go first. You can't scum them.
Listen, when you do very well as the victor on your own show. I have to admit, I'll give you a little grudging credit for that. Where do you go? OptionPit.com. We have our Vol Trade Club. We have Vol Edge that Mark runs that having a really good year. You want some vol education on how and why all this. There's a reason behind all of this volatility stuff. There's a little math, there's a little science, but there's a reason why vol is where it is, and options move how they move. What we do at Option Pit is we teach you how they move so you can better position for moves in the future. So lots of education. We've been trading options between Mark and I for about, almost 50 years combined. So, and Option Pit's been around for 10 years. So we got to be doing something right. I don't know what it is, but it's got to be something.
50 years, so 49 with the Rock Lobster, and then 1 year with the meatball there. Check them out. OptionPit.com is the place to go. And on behalf of the Rock Lobster and, of course, Tom and everybody over there in MIAX land, everybody over there in the land of Matrix, and indeed myself. Thank all of you out there for downloading, streaming, subscribing, for listening live, for sending in your questions, for voting in our polls and in our crystal ball, everything that you do. Keep it coming. Remember, we're off on Monday for the Martin Luther King holiday, so no shows on Monday. We'll be back again every other day next week, including Friday, with another episode of Volatility Views.
Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the Spikes Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with Spikes. Learn more about Spikes at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for informational purposes only and should not be relied on for financial or legal advice. Volatility Views is also brought to you by Matrix Executions, LLC, an agency broker-dealer focused on best execution and trading workflow automation. A technology-driven firm, Matrix is led by trading pioneers with decades of experience designing and building best-in-class solutions for options markets. Matrix connects to all domestic exchange venues and multiple international exchanges and serves both institutional and individual clients. For more information on Matrix Executions, LLC, please visit matrixexecutions.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.